So when clients call you and say, okay, so what's the next 18 months look like from your perspective, the house view, the David Solomon view, what does it look like? Are we in a recession?
Well, the house view is slowing economic activity, higher rates, and probably a 30% chance of recession as you look forward over the next 12 to 24 months.
Here, the JP Morgan view is that equity markets price in too much recession risk. However, they're also saying that equity markets, they estimate US and the Euro area equity markets are pricing in a 70% probability of a near-term recession.
Well, Sarah, thanks for having me. But yes, we about a month and a half ago, we came out with a call there would be a recession beginning the second half of next year. You know, it's pretty rare that you have this kind of advance warning for a recession. Anytime the Fed's going to have to step on the brakes substantially, it's a very high probability down the road.
David, why do you see it happening sooner?
Well, look, I think that you could build a case that the recession has already started. When you consider that 80% of the economy, otherwise known as real personal disposable income, has already contracted 4 quarters in a row, was minus 2% in the annual rate in the first quarter, minus 6% in the fourth quarter last year. So as sure as night follows day, consumer spending is going to follow the trend in real personal disposable income. And the only times in the past when you've had 4 quarters in a row of negative prints on real PDI, the economy's been in recession. And the only thing I'll say is, with all deference to Peter and to Ben Bernanke, and I know Ben Bernanke also told us that the problems in subprime are going to remain contained and that home prices wouldn't go down nationwide.
That's fair.
The stock market peaked at the beginning of the year, and the lead time between the peak in the market cycle and the peak in the economic cycle is not 18 months or 2 years. It's usually 3 to 6 months. So actually the markets are handing it to you on a silver platter.
Economy is what the retail sales number tell us, which is that this economy remains relatively strong, that the risk of recession is there but low, but the growth is coming down. So this is a slowing economy, but this is an economy that's unlikely to go into recession unless we get another policy mistake or a market accident.
Hey everybody, it's Eddie from Tokyo. This is your cryptocurrency update from Japan. And the reason why I uploaded that intro is because it's very difficult, almost impossible really, to determine with certainty where the economy is going and how quickly the changes will occur. There's just too many moving parts to really determine, and we are in a situation that we have never been in before in the history of the global economic situation. So really, when you hear people that are telling you they are so sure we're going left and one person says we're going to go right, I don't think anybody really knows right now. But why I am paying attention to the traditional markets is because crypto is quite correlated. Whatever the traditional markets do, it pulls the crypto market with it. Now today, right now, we're up. We're moving up again in the top 50. You can see XRP is up 5%, Polkadot up 10%, AVAX up 9%, Matic, VeChain, Tezos up 6%. Bitcoin is trading finally above 30,000, and we've added 4% to the global crypto market, 1.29 trillion. In the top 100, you've got Kyber Network. It is soaring right now, up 32%, trading at $2.71. It's a protocol that is providing liquidity pools to decentralized exchanges. It's based in Singapore, but they do have a lot of their team in Vietnam. I don't know too much about it, but the 32%, and it has a really big gain on the 7 days. Well, that, of course, gets on my radar screen. I'm going to have a sneak peek preview of a video that I'll be uploading on Monday, and some very important comments coming from the Quant CEO and R3. They were on a CBDC panel together. Yeah, you don't want to miss that. And another first in the world, as far as a use case, for the XRP Ledger. And it's big. But first, let's start with that sneak preview.
I want to do a Bitcoin transfer and then turn it into cash. But you can only turn it into cash once the transaction is complete. So you might actually end up with, if you bought something for 140 Rand, you might actually end up with 135 Rand. And those are the kind of risks that retailers are just not interested in. You can skin it however you like, but they're not going to go for that. So right early on, we got onto XRP, and we realized the power of the ledger and how it was working and what we could do with it. And most importantly, that we could issue our own currency on it, and which happened to be the South African rands. And of course, the 3.8 seconds for settlement, which is within the 15-second delay period for a POS payment. And then, of course, having a rands issued, there's no volatility, and then we could do the integration. The average remittance fee at the moment is 9.5%. Now that sounds 9.5%. I don't know if that sounds a lot or little, but it sounds like a lot to me.
A lot.
And yeah, what's important about us is why did we want to do this? So there's bringing the fees down and going into the friction layers and cutting into those fees of the retailers. But inevitably, why XRP? We can do this without a crypto. But the reason why is we also believe that most of these retailers in Africa are in various countries through Africa. So they are in multiple countries. For example, they would be in 15 or 20 countries with 15 or 20 different currencies. So, and one of the big products in South Africa now is sending funds back home. So, people come and they want to send, they come to South Africa to work, and then they send the funds back to Zimbabwe, they send it back to Namibia. And unfortunately, those are the people that are getting the raw end of the deal.
That was Jurgen Kernel, and he is in South Africa, and they have a real business solving a real problem, putting real money in the pockets of real people in Africa. And I am so excited to share this video in its entirety on Monday. And it also has a component that I will release a little bit of information out tomorrow with a trading bot that is very, very interesting. I think what drives me crazy the most is when I hear people say that XRP is a scam coin or that the ledger isn't utilized. That is just so far from the truth. And if you ever get anyone who is trying to challenge you on that, just point them in the direction of Zago Technologies. That as the world's changing, there's going to be this new opportunity for brand new technology companies to get a piece of this big payments pie. And Quant is very important because there is not going to be a single settlement platform. Anytime you hear someone tell you that everything's going to run on one platform, they just are not doing their research, and it's not going to be on just one technology. If you are really into use cases, this is a very good panel. Have a listen and listen carefully.
And the BIS had a paper on this last week, I think it was. There's an update to their CBDC survey, and now there's over 90% of central banks around the world who are actively engaged in some sort of research or pilot to go to production. Yeah, I think as an interoperability platform, we do have the ability to interconnect various different types of DLTs and public blockchains, depending on the use case. We've done quite a bit of work in Europe with SIA, with Corda, and we've interconnected Corda with other DLTs, and we're doing that with partners of ours that have closed loop private digital assets running on Fabric, for example, that need to be unlocked and operated on other networks, external networks, for example. Our technology is the bridge to be able to securely interconnect and interoperate between different networks.
We know that not all CBDCs or stablecoins are created equal. Of course, we've talked about algo-backed, fiat-backed. CBDCs as well are all kind of emerging with different models and different characteristics.
We really don't see survivability of algorithmic or crypto stablecoins. What we actually see is a world of regulated and issued commercial stablecoins that are done by institutions done by e-money license holders and commercial banks.
I think it's unlikely, though, that the world will land on a single common settlement platform. And I think that Maz, obviously, who were instrumental in driving this, have said that themselves. The threat to SWIFT, CLS, and others I suggest is real. We do see SWIFT making moves towards, becoming a value exchange network versus just a messaging network, whatever that means. I mean, you'd have to completely rewire that entire plumbing for that to be so, but it's not necessarily altogether impossible, I'd suggest.
This was just a fascinating story told by Jared Kenna. He is sitting between Jordan Harry there on the left and Diana Adachi on the right. This took place at the Linqto Global Investor Conference in Portugal. And he explains in this very funny story about how he introduced Chris Larson to Jed McCaleb, David Schwartz, and Arthur Brito. That began the history of Ripple. And it's really quite fascinating. I'm going to put a link to it in the description below. It'll also give you a big smile on a couple of occasions because it's got a lot of surprises in the story itself. But at the conference, let me tell you, the Linqto CEO, Bill Saras, he spoke about the first ever decentralized private equity exchange that he's building on the XRP Ledger. This is big. In the description of this video, you're going to find a link where you can then click on it, sign up. You're going to get tapped into their emails. They're delivering information like you've never seen before, pointing you in the direction of companies, unicorns, and projects that are making this space so interesting. Okay, everybody, we're jumping to the fluff and we're going to talk about Capsule Hotels. They're popular in Japan. There are lots of chains, and there's a couple of reasons why people use them. One of the reasons is if you miss the last train home, you don't want to sometimes have to spend, I don't know, if you live far away, it could cost you $200 to get home by cab. So people will use these capsule hotels to check into because they're so inexpensive and they're very clean and they're very convenient. You can stay for as little as $30. Another reason is if you live far out of the city and you do work late at night, sometimes you just don't want to take an hour to go home and then just have to turn around and come back again on the train. So people use them for convenience, and they've really become just quite popular. There's one in particular, though, that I want to talk about, and that's this one here. It's called 9 Hours. This is the one that is for women only. You can see it's very futuristic on the inside. Each unit is numbered, and yeah, it's just pretty wild looking, right? This is the view from the inside. I think if you don't have claustrophobia, it can be quite cozy. They have everything you need there: lockers, a lounge, Wi-Fi, power. Check-in can be as early as 2 o'clock in the afternoon, and checkout time is 10 a.m. So they're very flexible on their hours. You have everything you would imagine you'd have in a hotel, like toothbrushes, hair dryers, shampoo, bath towels. They even have laundry services. But let me show you what this chain is doing, which is quite interesting. They're providing a sleep scan that measures your quality of sleep. So during the night, it will register your breathing, how often you move. It's a full analysis, and then you are given that report when you check out. I think this is just so interesting, and it's, of course, designed to have you be more aware of improving your quality of sleep, because that's just so important for everyone to function at their optimum level. So that is what's going on in the world of capsule hotels in Tokyo. I hope if you come visit, you try one. I really recommend them. They're safe, clean, and just so affordable. All right, everybody, do take care. Sayonara for now. Bye-bye.